Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, January 8th, 2014. We kind of sniffed out a bounce back day yesterday after being 3 days down, and we certainly got that today. We were up on all three sides by a decent amount. The market internals were pretty good. The only standout was that while the market was higher on the day, the trend was up at 1.28, so that's going to definitely color our 10-day trend for a number of days until that rolls off of the count. But let's move on and take a look at the major futures contracts and see what they have to tell us. All right, so starting with the ES, I think that the thing that should really stick out is that yesterday we did settle below the 10 EMA, but today was just kind of a bounce day, so we didn't get that follow through below the 10 EMA. So we're actually still short-term positive for now. The MACD is rolling over, but for now, until we get that follow through below that settlement day that penetrated 10 EMA, we're still short-term positive. So key level is going to be previous day's low from 2 days ago, 1817 and a quarter. To the top side, 1843.75 is going to be important up there as well. Moving on to the NASDAQ futures. NQ futures, similar design. We did bounce back. However, we are already short-term negative here in the NQ, because here's your close below the 10 EMA, and then this candle number 3, and the seeker closed and followed through below the previous breach of the 10 EMA. So a little bit of a bounce up day, no big deal. This is probably where you would expect it, because it was the origin of this most recent breakout and also the risk level from this previous seeker signal. So to the top side, there's not too much as far as resistance goes until we get back up to range high. To the downside, the previous low on the move is going to be important at about 35.08. And then if we release below that, we've got the 50 DMA and then the 4/8 level. So there's a lot of space there for sure. I do think this is probably more of a bounce right now than anything else after 3 days down. So tomorrow could be kind of a wishy-washy day back and forth. I think a lot of it's going to depend on the data. A lot of data coming out tomorrow. We've got the ADP number coming out at 8:15. Keep in mind that everything's still kind of skewed from the government shutdown. We're going to get the 10-year auction, which is going to be kind of a minor thing. And then perhaps what could be pretty important later on in the day is going to be the FOMC minutes that are going to come out at 2 in the afternoon. So we definitely could get an afternoon move. So when you're going over your charts tonight, make sure you have some secondary ideas ready for the afternoon, because we did get the tapering on the last FOMC decision, and these are going to be the minutes from that meeting. So they could have definitely more impact than usual. All right, here's a look at the Dow. The Dow Jones is still short-term positive, has not closed below that 10 EMA yet. Still waiting for that. If we roll to the downside, this 4/8 level at 16,250 is going to be important. To the top side, the range high close on the move at about 16,520 is going to be the big one in play there. All right, now here's the one thing that the market really has going for it on the long side, and that is the positive condition that the cumulative advanced decline line is in. Up here on the top chart, we've got the New York Stock Exchange side, which is actually making a new high on this reading today. We're plus 1,000 issues on both sides. NASDAQ was plus 1,000 issues, also made a new nominal high. So we don't have that key divergence that we see sometimes where the advanced declines start to roll over even while we're printing new highs in the market. That was definitely something that I had my eye out for as we were into year end, but it just wasn't there. So just trade the technicals as you see them. Price probably still wants to roll to the downside after the initial fund flows are done for the January period. Just as a technical relief, since we had no downside moves last year, but we're probably gonna see some kind of an arrest to the downside, just because the advanced declines are still pretty positive. All right, here's the other thing that is also positive for the market is that the banking index, the BKX, is leading the market. We haven't looked at this pairs chart in a while, but this is definitely one they need to pull up from time to time. The BKX is still fairly strong. That's the blue line. The S&P is kind of trailing right now, so that's usually okay. The BKX a lot of times will lead the overall market, and for now, this condition is still positive. What you don't want to see is that negative divergence where you start to see the banks diving and then the S&P still hanging up with some relative performance, but that's not the case right now. So two things that the market has going for it right now are, number one, the overall internal health of the cumulative advanced decline, and the banks are acting relatively healthy for now. But let's move on and take a look at some of the individual sectors. All right, so here's a look at the individual sectors. Let's rank them from best to worst. The hardware index was definitely strong today. Was strong out of the chute today. We took a long position in IBM today. It was breaking out of a multi-day consolidation period. Had a real nice winner in that. Took that home with a real nice gain. So definitely keep an eye on the hardware makers in the computer sectors, because they are some of these things are just breaking out. VMware, VMW, which is a little bit more software oriented, did break out to a new high, but the cloud stocks, software stocks, and the hardware makers all performed pretty well today. BTK was also relatively high in the rankings today. The XOI popped up and showed some strength today. The one thing that kind of offsets that though is the OSX, Oil Services Index, definitely underperformed today, which is a little bit disappointing. The transports were okay today, decently performing along with the market. So all in all today, pretty good bounce day. We'll have to see tomorrow if this turns out to be more of a bounce. If we get a positive day tomorrow and then another follow-through day ahead of the non-farm number, which is coming out on Friday, we're going to have to kind of check our assumptions here a little bit. But for now, we got a bounce day up after 3 days down. All right, so here's the hardware index, the HWI, just powering higher today. We're going to see some resistance come in at a pretty substantial level here at the 8-ace level if we get up there. This is kind of a breakaway gap to the upside here at range high. So definitely keep in mind that this could be an exhaustion gap to the upside. So if we start to see some of these things start to sputter tomorrow, definitely be prepared to exit any longs and switch up your sides. Moving on to the BTK index. BTK index was real strong today. Made a new high on the move, but Mr. Seeker here is telling us that we've got a 13 exhaustion warning in place. So we got to look for some downside activity coming up in this next. Dow Jones transports were relatively strong today, but really didn't move the needle because we're still short-term negative, and it was an inside day, inside of the previous trading day's range. So be sure to bracket that and make sure you have an alarm set above and below the previous candle for the Dow Jones transports. SOX today was okay. Just another bounce after 3 days down. We're going to have some pretty good resistance here at the gap window that you can see that lines up with that 6-ace level at 531.25. Micron reported MU after the close. Numbers were good. The guidance was decent. Stocks up after hours, but we'll have to see how this really responds. If they get that thing a big gap up tomorrow, I'm definitely going to be looking at that on the short side for a break under the opening range. The BKX did close up on the day, but it was inside the previous day. You can see that big tall candle here. Let me just expand this for you. You can see this big candle up here, this big wick. So it was really inside the previous day's range. So it made a new closing high on the move, but not a new high on the move. So that's definitely something to keep in mind going forward. We're bumping up against that key area at +2-ace in the Murray Math box. So this is going to be some key resistance. So I'm definitely going to have some shorts ready in case we do take a turn to the downside in this sector. Oil services we want to take a look at next. They underperformed the market, barely closing positive on the day. Looks like we want to check in at this static trend line. So make sure you have some shorts ready in the oil services. The gold and silver index was fairly sloppy today, barely closing flat on the day. Was lower on the day, kind of got going back to the upside. So the sheriff in town is definitely the 50 DMA, which is right here. And we're right on the cusp of getting some positive momentum from the MACD. So if we do take out the 50 DMA to the upside, which I expect we will, keep in mind that the MACD is going to go positive above the 0 line, where you can start to see some momentum develop. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.